Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
What does a higher gold price mean for the sector? This is Paul Harris with Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to answer that is Brett Heath, CEO of Metalla Royalty and Streaming, and also our sponsor here. Brett, welcome to Kitco.
Thanks for having me.
Now, very interesting times in the gold space. Last week, gold hit a record $2,600 US per ounce. What will the higher gold price do for the gold producers?
Well, I think it's going to do a lot. And when we look at where the producers are today, I think they're on track to probably have the highest margins that they've ever had. When we look back at kind of the last move in the gold price, pre-COVID, we saw it go from kind of 1,400 up to about 2,000, nice big jump in the gold price, but there was so much inflation that you saw the margins expand, and within a few quarters, it was right back down to where it was. And so that move up to 2,000, which then it kind of consolidated for 3 years post that around $1,900 an ounce, that didn't really improve the margins because of all that inflation that was built in. Now, since the beginning of this year, when we saw the move, break out above 2,000, now it's at, as you noted, $2,600. Costs really haven't gone up. And in fact, as the world's looking to kind of go into a recession, I think we're probably, if we're not in one, we're definitely going to probably be in one. We'll find out a year from now from the government statistics. But I think that will put potentially even some downward pressure on costs. And so with the gold price going up $600, I think that most of the industry for the major producers will be clearing over $1,000 an ounce margin.
I mean, that's pretty exciting times. Fuel prices, energy prices are coming off, and obviously a lot of costs in the mining sector are tied to the oil price in one way, shape or form. So I think you're right, there's going to be a few quarters of increasing gold price and lowering costs, and margin expansion should generate some really bonanza profits.
I think so, and I think that if the gold price holds where it is today, I think you'll see most of those profits show up in Q4. You'll see it in Q3 too, but I think Q4 will be something that we haven't seen in a very long time. And when you look at the long-term kind of charts of the industry, you're seeing that right now. You're seeing the downtrend from the 2011. High in GDX and GDXJ and the HUI. These are the major gold ETFs and the major gold indexes for gold equities. Those downtrend lines have been broken.
I guess the question on many people's lips, particularly at a conference like this, is will higher gold prices translate into investors coming back into gold and coming back into gold stocks?
Inevitably, I believe that they will. I mean, that capital has to come from somewhere. What we're seeing right now is we're seeing a lot of kind of special situation catalysts, like event-driven type funds come in, and they have been providing some very modest inflows into mainly the big producers. And they have been the ones that have kind of been the beneficiary of, albeit the very small amount of flows that have come in. And we've seen that in the share price. But as those margins really expand, I think that not only are investors going to have to take a serious look at this. I mean, this has been one of the least loved bull markets that I've ever witnessed. Not only with just the mining equities, but gold itself. When you look at the gold ETFs as a whole globally, there's been 2 quarters of net inflows in the last 4 years. So, and that's gold. So that's physical metal, which is a different buyer than the equities. So, capital needs to start flowing back. We are seeing, one of those 2 quarters being this one, around 5-6 billion of inflows in global ETFs so far recorded in Q3. So that's very, very positive to see that sign come in. And we're starting to see some inflows in the GDX, which is the larger market cap. So these are the things that we're monitoring, but we're starting to see some of those flows start to come in. And I think once those have consecutive quarters or months of inflows, you're going to really see some of these equities take off.
And of course, we're starting to see Western investors coming back into the ETFs. When we're looking at the gold stocks, I think it's noticeable that some gold companies, their share price has appreciated 50 to 100% year to date. Those kind of gains, I would imagine, would start getting people outside the sector, generalists, interested in the sector, or at least sort of taking a look.
Yeah, those are real returns, and it's incredible to see that those types of returns on the lack of participation within the investment community. So I think that, again, as we look out to Q3, out to Q4, we look at the cost curve. These companies are positioned so incredibly well. They've been so conservative. Their biggest problem is really maintaining that production profile. I think that's going to be the biggest hurdle for the mining industry going forward. Okay,
I want to talk about production profile in a moment, but before that, what do you think has kept investors away? Some people I've spoken to talk of PTSD, or post-traumatic stress disorder, from their experience of the last cycle.
Well, if you look over the last decade within this industry, unfortunately, there has been a pretty reasonable amount of mismanagement, misallocation of capital. And what we've seen a lot of the big generalist type investors really just leave the sector. And you can see that in the AUMs. A lot of specialist funds are down over 50%. Some of them are down like 60, 70, 80% in AUM. So those investors left, they never came back. So the sector has done, I think, a really good job at being more disciplined with their capital allocation. And the M&A that we've seen over the last few years is really M&A by necessity. It's been M&A that I think has been very accretive, reasonably priced, and so forth. And so that's starting to bring in, I think, some more investors and putting some more eyeballs on the sector.
Well, let's dig into that a bit more, Brett. What transaction stands out to you? What have you thought that was a really smart deal?
Look, when you look at the big mining companies, I think any company that has picked up a very high quality, long life asset, those are the ones that I think are really going to pay off for the future, for those businesses, because the sector has such a lack of new long-term high quality assets. When I say high quality, this means good jurisdictions. This means good from a cost perspective, higher grades. It means great geology and so forth, and really size. Size is kind of critical, and so these are the types of strategic assets that I think will pay off in the future, because when you're especially the ones that have happened in the last 1, 2, 3 years, a lot of these acquisitions were modeled at $1,500 gold. And if they're in production today at $2,600 gold, the returns look completely different. I mean, you see 5, 6, 7 year paybacks go down to 2, 3 year paybacks. And so, having the long-term view and acquiring these types of assets over the last few years is, specifically not short-term oriented ones, but the longer-term kind of strategic type assets, I think are the acquisitions that have been made or the ones around those types of transactions, I think will be the best.
Now, most of the leading gold producers have done a transaction in the past couple of years, bar one noticeable standout. Sector leader Newmont's market capitalization is almost twice what former leader Barrick Gold's is. Is Barrick in the need of doing a big deal just to catch up?
Well, look, these big mining companies have had to do these M&A transactions to maintain their production profiles. Investors are very, very focused right now on maintaining the production profile, not even considering the growth side of the equation, but just maintaining the production profile of these portfolios. And when you look at the majors like Barrick, Barrick back 10 years ago was averaging around 8 million ounces annually. And now they're around 4. And that's even taking in the merge with Randgold and so forth. So again, it's going back to kind of lack of high quality assets, and these companies are, they haven't been able to really invest in the future. The junior side of the sector has had such a lack of capital that they haven't been able to do it either. Because usually it's the juniors that are the ones that kind of bring these things along, and then the majors come in and they get positions and they take them over. But the juniors have been starved of capital also for the last quite some time. And so these big companies are having to merge to maintain that production profile. And so when you look at Newmont, they took over Goldcorp and Newcrest. That's just to maintain that 5 million ounce production profile. Agnico, merging with Detour, which merged with Kirkland Lake. And so these are real big, solid, long-term assets to add a lot of production. I mean, Detour itself is going to be doing 1 million ounces a year for quite some time. So it's really just a function of trying to maintain that production profile for these big companies.
Now, with the higher gold prices, higher margins, higher free cash flow, what are your thoughts on capital allocation? You've talked about the lack of growth and companies having to just maintain production or working as hard as they can to maintain production. So with this cash bonanza that is just around the corner, where do you think they'll be spending that? Will that be on growth? Will that be paying off debt? Will that be in something else?
I think a large part of it is going to go to growth. And I think if margins maintain these levels, I think that it could spur probably one of the most chaotic M&A cycles that the sector's ever seen. And the reason is because with gold up at 2,600, it's going to take a quarter or two or maybe three for the CEOs and the boards of these big companies to kind of get comfortable that gold's not going to go back to 1,500. They still see 1,500 today, but maybe by mid next year they don't. And when you look at the industry as a whole, like I said, there's very, very few projects that are out there that kind of fit within the hurdles that these big companies need to kind of be a substantial asset. And so these types of assets, I think, will be the most sought after assets in the industry over the next 2 years. And these will be assets that are multi-million ounce deposits, either in production or permitted, probably with the preference in a good jurisdiction. And with $2,600 gold, all of a sudden those assets that may look kind of on the margin back when gold was 1,900 look incredibly attractive. So it's really just a function of when did these boards, when did these CEOs get comfortable that gold is kind of at this new level. And once that happens, then there's maybe a dozen, maybe 24 max assets that are fit that criteria that they're going to want to bring into their businesses.
Well, let me ask you this, Brett. If you could wave your magic wand and put two companies or two assets together that makes a lot of sense and would generate a lot of value, what would they be?
Oh, that's a tough one. I can't speculate that.
Yes, you can. Yeah. Come on. We're amongst friends with several thousand people.
Yeah. I mean, look, I think we'll see more consolidation in the royalty sector as well, along with some of the bigger mining equities. But I mean, if you look at from the mining industry perspective, it's really going to come down to synergies. If companies, there's two big companies and they've got two, they're right next to each other. There's a lot of synergies there. That's the easiest way for them to basically have immediate value creation for their combined shareholders. And so,
what are your thoughts on reserve price? Because a lot of the big producers, they still use $1,200, $1,300, $1,400 per ounce as a reserve price. Obviously, we're well above that now, and the outlook is that it's going to stay that way for a long period of time. So you could say that they're misstating their business by maintaining such a low reserve price. Will there be a move to increase reserve prices to more realistic levels, should we say?
I think so. And as I noted before, I think it's going to take a quarter or two of prices to kind of stabilize at these levels before the CEOs and the boards start to feel comfortable to move those reserve prices up. But as they move those reserve prices up, that's when all of a sudden the projects that they wouldn't consider a year ago or 8 months ago look incredible. from an acquisition, from a return perspective, and particularly the ones that are surrounding their existing infrastructure and so forth are easy tuck-ins. So and when you look at the relative performance between the majors and the juniors, and you can pull up a relative performance. I mean, the one that I like to look at is the GDXJ, which are both Van Eck ETFs, versus the GDX. And what you'll see over the last 15 years is that the majors, the big mining companies, have actually outperformed for like 15 years straight the juniors. And when you look at that relative performance, you see there's like this level of support that basically goes back a half a decade, and I think that's about to reverse. And I think that's about to reverse because when you look at kind of where the demand, where the capital is going to flow in, like where, and outside of just the industry with investors, but what these companies and what the industry has to do to make sure that they can hit those production levels and so forth. I think a lot of that capital is going to flow into these types of assets, which the majority are owned by the juniors, and we're seeing kind of signs of that already.
Okay, let's talk about Metalla. A year ago, you combined with Nova Royalty in a 500 million Canadian dollar deal. The royalty space is uber competitive. You mentioned a moment ago you anticipate more M&A in the sector. Is that something you're looking to be an active participant in?
Yeah, potentially. I mean, we're always looking at opportunities. The acquisition of Nova, at the time, putting the two companies together was around 500 million, but the price of the Nova portfolio is around 140 Canadian. And look, we're in a really good spot from a growth perspective, and I think it's a good position to be in today. I mean, we've got over 100 royalties. A lot of those royalties are on assets that we just described. These multi-million ounce type of deposits, permitted, close to being permitted, production. I think these are the ones that are going to get the most attention here over the next couple of years, and we've got exposure to a couple dozen of them. Particularly a couple of the royalties in the Nova portfolio had some pretty meaningful updates just this last couple weeks with Taka Taka, meeting with the Salta government. Their First Quantum's making plans to advance that under the new regime there that Malay set up. And also Copper World just received their second out of their third kind of key permit. So both of those assets look like they may have potential to find their way to a final investment decision or a construction decision over the next maybe 12, 24 months.
Why was it important for you to get more exposure to copper, which you did get through that Nova deal?
So again, this goes down to something that we spoke about a little bit earlier, but it's the exposure to these really high quality long life assets. And in the copper business, it's very common to have a big copper mine that has a reserve life of 30 plus years. And when you look at the data, a lot of these assets will go for double that or even more historically. And from a gold perspective, the mine lives are much, much shorter. So having a nice blend of these copper assets, obviously, we're bullish on the setup on copper as well. Over the second half of this decade, we think that copper is going to significantly increase in price just from the supply and demand fundamentals that has been laid out, various different research organizations and banks. So we think that there's a lot of really good fundamentals behind copper as itself, but more importantly, it's the quality of the operators and quality of these assets that allow us to have a multi-cycle type of view on cash flows. Because in the royalty business, it's all about growing within these cycles. We went through a pretty significant down cycle. I think we're at the beginning of a major upcycle, and these upcycles may last 10 years. It may last 10 years. And so, as we've gone out from a capital allocation perspective and really handpicked a number of these different assets to provide the growth that's in front of us that allow us to I think really be able to sit back and continue to scale our business.
Okay. Now, Metalla recently adopted a minimum share ownership policy for directors and senior executives, which requires you, for example, as CEO, to own stock equal to 5 times your annual salary within 3 years. This seems to be an obvious mechanism for companies' executives to support their companies and also to align with shareholder interest. Why do you think so few companies actually have one of these plans or requirements in place?
They should. They should all have it in place. I would say it's a little bit more difficult for smaller companies to do it than larger ones. But more importantly, larger companies, as we're transitioning from a junior to a mid-tier, that was something that we wanted to make sure that we kind of had upfront and transparent with our shareholders. Look, we're aligned. Personally, I've got the majority of my net worth in this business. I'm very, very aligned of looking at every single decision that we make as an owner. And it's critical from that perspective. And so really it was just a formalization of something that kind of was already there within our business, but it was something that we wanted to do is just as part of the evolution of the company growing and becoming exposed to a much larger audience and much larger investors and so forth.
Well, I think it makes a lot of sense, and I think a lot of other companies should follow suit.
Yeah.
Brett, wrapping up, how do you think the rest of the year is going to play out for the precious metal sector?
I think gold's going higher. It is astonishing the lack of participation that we've seen within this bull market. I mean, if you look, even if you take gold out of the chart and just put that chart up, I mean, it's something that just knocks you right off your feet. And having this type of performance, and you go on Bloomberg and gold's breaking at all-time highs. Like, you can't find one article on gold, and you can still find.
Well, I'm sorry, I have to debate that.
Yeah.
You go to kitco.com, you'll find lots of articles.
Yeah, Kitco's ahead of the curve. But Bloomberg and CNBC and these mainstream groups, like they are not covering it. You've got 15 different news articles on the Magnificent Seven still, or NVIDIA or AI. So what that tells me is that there's still a huge amount of energy that is on the sidelines that can fuel this gold market higher. I think that the majority of the buying so far has been central banks. That's been the main driver of the gold price. We're just starting to see the ETFs flow along. And like I said, we've had two quarters of inflows in the last 4 years. And so as that starts to come on, that can push it higher. That could push it 50, 100. I mean, earlier this year, I had a target of 2,600 to 3,000 on Kitco. And we're basically at the lower target right now. I think there's a really reasonable shot that we get somewhere close to the higher target by the end of this year. And what that does to again, the margins of this business, I mean, it's going to be really fun to watch and see, but I mean, it looks like it's happening. And for savvy, smart investors that are out there today, it's a excellent time to do some homework.
Well, let's hope so. Brett, Heath, thank you very much for joining us today.
Yes, thank you.
We have a lot more to come from the 2024 Gold Forum Americas, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.